Dr. Brian Jacobsen, our chief economist, joins us. Hey,
it's good to be here.
Let's see. Where do we even start? How about that growth is slowing to a crawl?
Yeah, I know. We got some data this past week that really indicates that economic growth has been slowing. There were two really key data points that I really was watching for. We had the gross domestic product revisions for the first quarter. Okay, so the gross domestic product, it's the market value of all final goods and services that are produced in the economy. And last year, that growth was really good. But in the first quarter, it really downshifted to a slower gear. It was like 1.6% annualized. It was revised down to 1.3%. Okay, so not horrible, but slower. And then we got the personal consumption expenditure data on Friday. And that was, to be perfectly honest, disappointing. Personal spending was actually, in inflation-adjusted terms, negative as far as the growth month on month. We haven't seen that in a while. So after you adjust for the increase in prices that we've seen, people actually spent slightly less in April than what they did in March.
Is this the one that I see the phrase, the Fed's favorite?
Yes, absolutely. And it's a really fascinating data release because it has data about people's income and then about their spending and then the prices. Okay, and the Fed is targeting the PCE deflator. Deflator, that's just a fancy way of saying it's basically a price index. So the personal consumption expenditure deflator is how they actually try to target inflation. Ever since 2012, they've been targeting 2% over the medium term for inflation. And clearly, they've been kind of missing that target over the last couple of years.
Is there anybody that really says, boy, I think we can get it down to 2%?
Oh, sure.
Really?
I mean, honestly, when I look at the data from 2012 until about, let's say, middle of 2021, inflation had been lower than 2% per annum on average. So for that, basically that whole decade, they were undershooting that inflation target. And then all of a sudden, COVID, stimulus, we saw inflation rise very rapidly, and so now they've been overshooting it. It is quite likely, if we consider demographic trends, also how it is that people have been deleveraging, that is, trying not to take on more debt, that could actually lead to lower inflation in the future. One of the big wild cards as far as the longer-term inflation picture is really more around budget deficits and then also deglobalization. Just the idea that trade wars between the U.S. and China, you also have conflict between Ukraine and Russia. Will these things keep inflation a little bit higher than what we had in the 2012 to 2021 period?
We've also talked in the past about the fact that inflation could come down, but that doesn't mean prices will come down. However, I believe the companies are starting. I saw that Walgreens is dropping prices on a bunch. McDonald's is working real hard to say, no, our hamburgers haven't gone up that much.
Yep.
But it's the consumer starting to react.
They are. We also got the Beige Book this past week, and that was a collection of anecdotes from the Federal Reserve districts around the United States. And there were signs that people, consumers, are really beginning to pinch the pennies, that they are looking for bargains. So not only is the Federal Reserve seeing that in this qualitative data, the companies, you mentioned McDonald's, they're offering this $5 meal deal thing. Burger King is coming out with something comparable. We look at, say, Target announcing that they're going to be dropping the prices of more than 5,000 items. Walmart really taking market share from Target because they are trying to really be the leaders with lower costs. Consumers are beginning to trade down. That's showing up in the data, not just on the company side, but even on the macroeconomic data side of things.
You're even seeing it in like makeup. I saw that Ulta, did okay,
oh, sure. Yeah.
but their projection for the next quarter, not so great.
Oh, yeah. That was one of the things that I really took note of with earnings season, which we're really coming out of. Most companies in the S&P 500 have already reported earnings, but there are still a few who are reporting. They maybe had met expectations for the last quarter, but really the big question is what sort of guidance are they giving for the rest of this year? Some of those companies, luxury goods, now I honestly don't know if Ulta really is. My wife shops there, right? I consider it a luxury good, but they are saying the guidance is a lot lower than what maybe the investors were originally expecting. And now the stock prices are taking a hit because remember, stocks are really about the future. What are people expecting to happen, not reacting to what has happened?
Costco reported. What do they expect to happen? Except I see the $1.50 hot dog is staying.
Oh, I'm really grateful for that because I like going there at least a couple times a week to get that and also the pizza. And their cold brew coffee is actually pretty good. But they are really saying that individuals are they're focusing on the food and then also consumer staples, the consumer discretionary area, things that people can maybe postpone. That's the area that they're seeing a little bit more sporadic demand for.